Hello everyone, today is Tuesday, September 8th, 2020. My name is Evan. Welcome back to another midweek stock market analysis video. I usually skip the midweek videos when we have a long weekend because we do our long form market analysis on weekends. Typically not a whole lot has changed, but with a VIX north of 30, with all of the movement we're seeing out there, what better time to take a pulse and try and make some sense of everything that's going on. So let's jump into our technicals dashboard here. You can see stocks getting hit pretty good here to start off the short week. So markets were closed yesterday. We opened up this session here down basically all the way up to 5% in the Nasdaq 100, which continues to be the underperformer here. This is what has basically been dragging the market lower over the past really only 3 days of selling. It seems like it's been weeks on end, but it's really only been kind of these past 3 sessions here where we've really seen the sellers out in full force. You can see over the past 5 days now, the Qs are down 8.41%. And if we take that in comparison to any of the other major indices, that is, by and large, the biggest decline by far, almost double the S&P 500. And then we see the Dow is the leading or the relative leader there. We are below the 10 SMA across the board, still above the 50 and the 200 SMA though in all of the major indices. If we scroll down and take a look at sectors here, you can see we got just materials, which are trying to hold into positive territory, followed by utilities and real estate. On the downside, it is technology, it is energy and biotech, down anywhere from 5 to 8% over the past 5 trading sessions. In terms of major markets, it's VIX, it's volatility, it's fear. That's what we're seeing pop over here, 20% to the upside, followed by TLT, which is your long-term bonds, IEF, your mid-duration bonds, both outperforming there on a relative basis, which makes complete sense. On the downside, USO, a lot of those losses being attributed to today's session, down 12.39%, followed by natural gas and silver. So let's jump into the charts here. Let's try and put some of these puzzle pieces together and try and give some roadmap here to kind of help everyone navigate this volatility. It's been a while since we've seen this volatility, and it's sort of a new playbook on how we need to approach this market rather than, kind of the market we had, just a week ago. So if we look here at our equity market grid, we've got our smart trend filters applied. These are the colored dots you see on the screen there. They're a price and volume based indicator. They measure trend and trend strength. This is a weekly picture here, and basically we can see that on the weekly time frame. So this is long term. I usually like to equate this to 3 months or longer. This is basically uninterrupted here to the upside. Everything is still in bullish trend formation despite the weakness, right? And couple of the things we've been talking about over these past few videos during all of this market volatility is that time frame absolutely matters. Excuse me. And when I try and give analysis in these volatile times, I always try and attach a time frame to it. That's how you should think about it as well. But on the long-term time frame, all still bullish readings. If we go down to a daily chart, so this is where my view here on this is basically a month or longer, so to speak, around a month or so of duration. You can see that all of the markets here, all of the equity markets, S&P in the top left, Nasdaq top right, Russell in the bottom left, ACWX, which is international, XUS in the bottom right, all of them are under pressure right now. We've got yellow neutral readings for all of the US markets here. We just went bearish today on the world ACWX here. So basically, the world minus the United States, that's what this ETF tracks. This just got its first sell signal here for the first time in a couple of months. So the trend is starting to reverse course here in international equities. Hasn't quite happened yet in the US, but everything is getting pretty close. The Russell 2000 is close to transitioning lower. The Nasdaq will be close to closing lower as well. The Nasdaq hasn't seen a sell signal here since April of this year, and it was nearly since March. We basically, finished off the selling here and went to neutral and then transitioned up to bullish way back in March, early April of this year, and it's basically been a nice kind of smooth uptrend all the way since. And now we're starting to see that for the first time really get pressured as we are underway on our largest pullback since bottoming out in March. So that is interesting. That is something to pay attention to. We will, certainly be covering this as the week progresses and in our weekly recap to see how the Nasdaq finishes out this week and whether or not it can repair itself. Right now, the way our smart trend filters work is they basically accept some noise in here, and that's why you're not seeing them flip down. We are below the trend filters in all of these markets, but we haven't convincingly got enough to really transition them to that sell signal yet. So that's what we're waiting on. It looks like it's going to happen if the buyers can't get out there in very short order here and do some buying. So let's switch over to, sorry, not this view yet. Let's switch over to our roadmap view, and we're going to go to the Qs because that's kind of what we've been keying off of here over the past couple of days. And basically, the Qs, when we look at it kind of holistically here over the multi-month period with some simple trend lines drawn on ourself, you can see that we've been in this rising channel since April. We are breaking below the lower end of this channel for the first time again since really kind of kicking off into this higher gear here. Heavy volume on this breakdown, and we also sort of looked at it from this perspective here. So we even had this slightly more extremely sloped elevated near-term channel that developed over about 2 weeks worth of trading, broke down from that, and you can see we're coming back into this 265 to 268 zone. This is kind of the sweet spot we've been talking about here as this retest, as far as this retest is concerned. This is the last spot that the Qs really sort of broke out from. And quite frankly, again, let's keep things in mind here is just how much ground that the Qs have covered this year and over the past 4 or 5 months in particular. So as it stands right now, if we were to throw our roadmap on here, we're basically at an 11% pullback as of the lows today, maybe a little bit more, so somewhere in the lower 11s from the highs 3 sessions ago to the lows today, down about 11.2%. Again, that's the biggest magnitude pullback since we bottomed out in March. So really, when we look forward here at the Nasdaq, what we're going to be paying attention to is this zone in here, this 265 to 268 zone. If we start breaking through that, we got kind of an air pocket down to around 252 or so, which is the lows of this trading range we were in for the month of July. That's sort of the way I'd be looking at the potential support below where we're currently trading. Now, we gave some actionable kind of advice here, some tips on your short-term active traders if you're looking for spots to potentially re-enter or some opportune points, so to speak. We talked about this spot here on Friday. So remember, we talked about basically the lower end of this channel here as being a potential action area of a bounce point. We essentially got that on Friday. It basically played itself out very quick, all in one day or all in a half of a day, because we came crashing down below this channel down here. So if you were aggressively trying to buy this first initial dip under this channel, then you got rewarded by this snapback, this rally we saw throughout Friday's session. It was up almost 4 or 5% off of the lows. That was an impressive bounce, but that's all it lasted, is just a single day, because we started the session on Tuesday here with a gap lower. So when we look at the price action now, the ways to sort of navigate this, the tips for the short-term traders here is, first, is if you go across the markets today at the close of today, what held on to Friday's lows? That is the first question you can ask yourself, is what actually managed to hold above and close above Friday's lows? Because if you at least had that footing where you could have stayed bid above Friday's lows, you've got some degree of relative strength there. You've got some degree of confidence that is coming into that market. If we look here at the Qs, you can see that was not the case. We closed below Friday's lows, and we closed right at the lows of the session. So the Qs are not an example of this. You would want to be looking at markets or individual stocks that are starting to hold above a prior day's lows. I think that's one way you can sort of think about markets and putting in a watch list of things that are holding up better. The better solution, or the more confidence, the more strength, is if you find stocks or ETFs that are breaking above a prior day's highs, right? And that's going to be really hard to find in this particular market environment right now for ETFs. There are some individual stocks, of course, that are, clearing above Friday's highs. That would also give you some confidence, some degree of relative strength, and some degree and confidence that buyers are starting to leg into those particular stocks. Those are two sort of techniques in the very, very short term you can use to identify things that are starting to at least hold up and perform a little bit better. So that is one sort of, or a couple of sort of techniques there in the short term. The other thing that we talked about in these past two videos is just watching the VIX. And basically we use, to keep things very simple here, this level, this 30 level in the VIX. And to keep it really simple, again, the longer we stay above 30, or as so long as we stay above 30, I think you have to be careful about those near-term long positions. So what we ideally would want to see to get this market kind of back into healthy mode is the VIX start to break down and lose the strength over 30. We'd want to see it start to roll over from these levels, and we haven't seen that yet. Again, we did close well off of the highs of the session, so I think that was actually constructive today. The fact that a lot of the markets even closed at their lows of the session, but the VIX backed off and closed only up 2.63% was actually a decent sized win. Maybe there was just a lot of protection getting still picked up for the long weekend, and maybe it wasn't as bad as it could have been, so to speak. But regardless here, I think the VIX over 30 is something where, again, you have to be more cautious. If you start to get the VIX rolling over here, and then you start to build out your list of stocks that are holding above the prior day's lows, or ideally breaking above the prior day's highs, then you have some ingredients there for some short-term trades. That's certainly the way I would sort to think about it. Looking for that very, very short-term opportunity. If we go to the S&P 500 now, and we go to some of these other markets here, we look at the S&P. We've been looking at it from this view here, and you can see we're basically into this upper level spot here. So essentially at the highs to where the lows of today's was about a little over a 7% correction from the all-time highs. This is a great spot to see buyers step back in for the S&P 500, because again, this is the breakout zone. This was the all-time highs from February. If we start convincingly losing this area in here, then the S&P 500 is just in a much tougher spot and just has much more to prove on the long side if it starts to lose some significant breakout levels and past technical levels like this 33.45 area. So for the S&P 500, I'd be watching this pretty closely. We're dancing all around it right now. We want to see buyers essentially show up here sooner rather than later. Maybe a gap lower to start off tomorrow's session, kind of put in more fear into everyone, and then just see buyers kind of bid it up and close us back over 33.50. That would be a good kind of indication of maybe some type of reversal. We can keep that on the playbook, but for now, if we start losing this area in here, then you're going to become a lot more suspect there. And at that point, I think our trend filters, which we looked at the top of this video, are going to start to turn down. If we go to the Russell 2000 here, the Russell is actually on a relative basis now starting to hold its own a little bit. It is clearly breaking down, so there's definitely not a whole lot to like about it in this technical picture here, because we had this sideways channel, we lost 153, and that to me is basically puts it on a sell signal just based on price structure. But if we count on the relative performance measurement here, we're only down around 5 or 6% off of the highs made just a couple of weeks ago. That's better than the Nasdaq, better than the S&P. So, you know, on that very short-term relative basis, it is actually starting to hold up just a little bit, but I think the level is pretty clear on the upside. Got to get back over 153 to really start acting constructive there again. Otherwise, you're just in, you know, you have the potential to really kind of roll back to some levels seen back in June, July. So IWM penalty box until it's over 153. So that's sort of how I would frame out this market. Again, it's really going to depend on your time frame here. In the short term, you've got lots of damage and lots of warning signs that it's probably not necessarily time to get involved yet. Legging in is always an interesting way to do things if you are you know, compelled to sort of get into some positions. If you're on the longer term perspective, then you know you have more of an opportunity here. You're probably shaping up your buy list. When you look at the Qs on a weekly basis, you basically haven't had many 2 and 3 week opportunities down in a row for the Qs to actually get involved in some longer term positions. So if you are, you know, more of a longer term position trader looking to hold things for multiple months or even a year or two at a time, then you want to be shopping, you want to be getting your buying list ready. You want to look at stocks getting closer down to their, you know, their 50-day, their 100-day, their 200-day moving average, and selling off 10, 20, 30, 40% from highs. That's probably the way you would be attacking this market. So you just really have to kind of, you know, figure out where you are in that landscape, everything in between. So hopefully that makes sense. Hopefully that helps on some tips and some just actionable ways to navigate this market. If we go back to our grid here, you know, we look at the VIX. The VIX on a daily chart here, you can see is still on that buy signal. So again, it transitioned up here 4 days ago for us on this model, and it continues to hold up. So again, you really just want to see the steam come out of that. You can see TLT still kind of battling sideways. And if we look at commodities here, I think what's interesting is on the daily chart now for USO, you produced a sell signal really on Friday, and it certainly continued today. We had a big gap down on you know, more news, 6% down for USO, and you can see this is now in sort of a broken trend and moving to the downside here on the daily chart. So same thing with commodities. Commodities have been acting really well here since the May lows, and essentially you're starting to get your first sell signal here for commodities. So keep that in mind. Silver, same thing. Gold, same thing. This whole grid here on commodities, and part of this is you know, with what the US dollar is, it got a little bit of a bounce off of its lows. This plays an impact as the denominator on all of these things, but you're starting to get some, you know, some counter trend moves in all of these things that have been working. I do want to finish off here with just a sector view of the relative strength, or what I've done here is if I look here at this watch list on the left side, these are the sector spider ETFs, and I've created this little column here. This is their 3-day returns. The 3-day being significant is because that's effectively when the sell-off has started. So we had the highs, you know, 3 days ago. It's when stocks started to sell off. And basically here, if we just look at the best performing ETF right now, the best performing sector since the sell-off started is utilities. You can see utilities here really haven't budged a whole lot. I mean, they weren't anything impressive prior to the sell-off. They're still moving sideways, so structurally they're not doing a whole lot, but they are acting as a bit of a safety haven during these times. Real estate, basically the same thing. So XLRE essentially still going sideways here. Utilities and real estate going to be pretty closely tied to one another. Financials, I think, is interesting. Financials only down 3% in the past 3 days, so that's pretty interesting in the sense that they've been one of the worst performers for the year and have underperformed for the year, but they're actually starting to hold up a little bit now. And then XLP, consumer staples, down 4%. You know, this is you know, usual standard practice for defensives at the top of the list. On the bottom of the list, it's technology. So again, probably not that much of a surprise, but XLK is down around 11.24%, followed by semiconductors down almost 11%. These two sectors here really are seeing, you know, you see the concentration of where this sell-off is happening, because the third worst performer is biotech, but SMH and XLK are basically double the sell-off here of what biotech has seen in the past couple of days, which is 6%. So really shows about some of the concentration. I also actually think biotech is interesting today in the sense of, like we talked about for that short-term tip, it did manage to hold on to Friday's lows. Again, I don't want to say that this is a pretty candle here, but it still managed to hold on to Friday's lows. I think XBI actually looks, a little bit better here. So the more equal weight, kind of smaller cap biotech, this actually looks decent in the sense of it got nowhere near Friday's lows, and it managed to actually close positive based on where it opened on the session. It was still down 1.3% on the session, but XBI, I think this is actually interesting, some relative strength brewing here. And we did do some buying here in this particular ETF and names this morning. So I think XBI is kind of interesting there on some of the strengths shown today. But I think that is it. Let me glance over to my notes here. Talked about VIX, talked about those longer term trend lines, sector performance. I think that's everything. So hopefully this video was helpful. Did a quick little snapshot here of just everything that's going on. Remember, time frame matters and risk management matters. This is not the market you had 4 or 5 days ago, so you have to be able to adjust to that. If you are trading, smaller position sizes probably make sense because ranges are increased. So you want to think about that as you're transacting out there and executing on those new ideas. So hopefully you're doing well out there. Thanks as always for tuning in and watching. We'll be back tomorrow with some trade ideas, Friday with long form market recap, and maybe some videos in between if these markets continue to stay moving at the clip that they are. Thanks again, and talk to you in the next video.